coming to us as a recording, and I've got to tell you that, oh, I've just lost my control panel. That makes it very, very interesting trying to bring you the next video. Let me see if I can restore that. There we go. The next presenter has absolutely a disregard for whatever's going on in the world, which is an enormous contrast to what we've just been talking about. I'm going to bring him up now because he trades 5-minute charts and he trades all of the things that you would expect him to trade on a weekly basis, and that is gold included. So I'll be interested to hear what the technical aspects of his view is going to be in the next 7 or 8 minutes or so. So let's bring him in, and he's going to introduce himself. So let's start with that.
Now, I'm just going to share my screen and just talk to you about something that I think is very interesting. So just to avoid a little bit of distraction, I am going to switch off my video. Now, what I want to talk to you about is the patterns that happen at the open whenever a session opens. I really think it's important because we find great opportunities to make profits when the markets open. The reason I find it fascinating is that when you trade in indices, for example, the different stock exchanges have different opening times, but because they're all part of the global markets, the major session openings also have an impact on them. So let's have a look at Hang Seng 50, Hong Kong 50, top 50 companies trading off the Hong Kong Stock Exchange. Let's have a look at Friday, and I'll give you a little bit more detail about the exciting things that I think we must all have or bear in mind. So this was Friday's candle. Look at the previous day. So guys who come to my show, you know some of the basics always put in: low of the previous day, red line, high of the previous day. So this is a level of support, level of resistance that we need to keep a watch on. Then, of course, you plot in your 50% pullback. Just use your Fibonacci retracement tool, bottom to the top, and there is a 50% level, market whatever color you want, just use a light blue line. Then the open of the day. So we trade off the 5-minute time frame. Let's go straight into it. And let me show you what I'm talking about. Okay, so this is a day that took place on Friday. Okay, now midpoint, like I showed you, there are patterns that tend to repeat themselves. Now, when I say tend to repeat themselves, we're talking 70, 80, 90% of the times. If you look out for these patterns and wait for them and trade them, you'll be able to get good opportunities. So I talk a lot about 3 push patterns, which are wedges. So here we had the gap up. Market closed here, market opened here, selling off on the first candle. But have a look at the pattern that formed in the early parts of the session. You got to wait for the pattern to form. So it might take an hour, it might take more than that, or it could be one of the other patterns, which is just a trend from the beginning, the bear trend, bull trend. But today we didn't get that. So here are the 3 pushes. Market went up here with the gap up, came down, went up again, came down, went up. Already have 3 pushes. You know there are forces in the market that are in favor of the bears. Any 3 push pattern is an indicator of bear forces. Okay, so one tick, I look for the 3 pushes and see whatever is formed for me. But also within that 3 push pattern, there's something that's pretty common. It's a double top. There is a lower high, double top. This high is lower than that. So we have the 3 push pattern indicating bear forces. We have a lower high, double top, also indicating bear forces. Market went up, created a high, tried to break above that, failed. So already I'm thinking bearish price action. Then I need to just continue to look for more confirmation. Okay. We have another pattern that is formed. This is formed with a double top. Okay, we call it the low one. So the market has gone up. First attempt to break previous lows. That's a low one. Very good. We have another low 2 here. Market went up and came down again. That's a low 2. Then we end up with the double top. Then we have a third attempt, a little break between that, which is a low 3, because market is going down for the third time after going up. That's all confirmation of these 3 push patterns. So I'm happy, but I need a little bit more information. You could take that trade if you wanted, could have triggered double top after a wedge. You put your stop above here, or well, it's above there, but you could put it a little bit higher if you want, but that's the correct place to put it. So you can take that trade if you took it in the trade. If you're not in that trade, you have to wait and see where the next opportunity. If it goes immediately in the direction of the bears and it breaks out beneath that, you're going to wait for a pullback, okay? And the pullback comes a little bit later on. But in any case, here the market went sideways, but the sideways gave us a lot of information, because the next time with the bear candle, we had an inside candle. So inside candle, fantastic, take a trade here. That's a pattern on the open. Now, the interesting thing about the Hang Seng is that the market closes at 6 a.m. my time, then it opens up again. So on the open of the second session, another pattern formed. Okay, you can see almost an inside candle here, outside candle, breakout mode, confirmation that the bears are carrying on. So if you're not in the trade there, and if you just come in the market, look for an entry here. If you don't take it, there's another lower high entry. Later on, this whole part is the opening of the the London Stock Exchange. Again, that market, the Hong Kong market closed my time 10:30, opens at 11:15, and you're looking for patterns at the open. Market closed with that candle, and we in a bearish price action from here. So we got to look at the next candle and see what happens. Market opens. Yes, it's a high test candle, but why do we have a bull close? So alarm bells should be going off in your mind. Market bounces off here, which happened to be the low of last year. So with that indicator, you can't be holding your trades and going away and assuming it's fine, because that's a lot of information there. So then you got to manage your trade, okay? If you've taken a trade and we're here, your stop is at this level at this present moment in time. You see that, of course, you must wait for follow through to see if market breaks beneath that. In any case, might break and pull back, but it doesn't. When you get a reversal candle, which is also a bit of a trading range, if you're holding your trades, you close your trades. If not, you just trade and stop down. So that's all happening at the open of the London Stock Exchange. Now, the next open that's very important is, of course, this open of the US markets. And when the US markets open, the New York Stock Exchange opens my time, 4:30 p.m., 2:30 GMT, but allow an hour before for pre-trading. So again, you have to look at that price action. We're back within our earlier on trading range, this pattern that we traded. So there are forces defending that. So no surprise here. Again, 3 pushes, 1, 2, 3. So you got to find ways to get into the market if you're not yet short. There is another, almost a repeat of what we had earlier on here. If you don't take that trade, if you do take that trade, stop is still above that level. If you don't take it, wait for more bear candles. You can sell beneath that, put your stop against it at the same level. Then you got to manage your trade, get a 2-bar reversal, get out of the trade. So very quick, but patterns at the open are very important. And I will be spending a bit more time on that when we come to my show, when we get to my show. So see you on Wednesday, 9:30.
Okay, that was George. And